Good evening. This is the ShadowTrader Video Weekly for Sunday, January 27th, 2019. I'm your host, Peter Resnicek from ShadowTrader.net. The coming week could possibly be the most important week for the stock market for the entire year of 2019. I'm going to show you exactly why that is. One of the catalysts that's coming up this week that might push the market in a big way in either direction is earnings. It's an extremely heavy earnings week with a lot of household names reporting. When I delve into the market profile, I'm going to show you very specifically the most key important level that I want you to pay attention to for the coming trading week. And last but not least, I'm going to leave you with my best stock pick for all of 2019. All right, let's get into it. Okay, so why is this the most important week coming up in the markets? Basically, I think it is that because of where we are. We are between quote-unquote rock and a hard place like Aerosmith. Those of you that have a memory that goes way back. And the reason I say that is because this is the main downtrend line in the S&P. And obviously the S&P is our main benchmark for the market. It's the most important index. We will analyze and look at Russell NDX from time to time, even sometimes Dow, but it's really the S&P that's the king of them all, and this is really what matters. And you can see the S&P is just now starting to creep up right up to its main downtrend line. So this is very, very important. And this week is also important because we came out of a three-day balance here and we broke out to the upside. And I'll show you this much clearer when I get into the market profile. And that's actually tells us a very, very important line in the sand above this little balance area that we need to hold. Okay. Now, what's also going to make this week really extraordinary is the fact that it is earnings, and it's a very, very heavy earnings week if you look at it. So if you look here, you can see the numbers here just show you how many companies are reporting. So on Monday, 77, 108 on Tuesday, 135 on Wednesday, and 172 on Thursday. So not only is it a really big number of companies reporting, but the ones that are reporting is very, very important. We've got Caterpillar on Monday before the bell. That's quite a bellwether. That's going to give us a lot of information on the state of construction and growth out there. We have Apple on Tuesday. Remember that they already gave some negative comments within the last month or so, and it sent the stock lower. So we'll see if the earnings report confirms or denies that. Wednesday is very heavy. Just looking at my notes here on my blotter, Boeing, Facebook, PayPal, Tesla, Qualcomm, McDonald's, and Microsoft, all on Wednesday. And Thursday, the stock that is very near and dear to my heart, it's one I day trade pretty much every day, and that is Amazon. And Amazon's going to report on Thursday, and then there's also a couple biggies on Friday before the bell. Generally, companies don't report after hours on Fridays, only in the morning, but we do have Honeywell and Chevron on Friday. So it's a very, very heavy week. So given all that, that is probably going to be the catalyst that is going to break us out either way. And we are either going to move up above this trend line, wherein I think that we head over to the 61.8% retracement, which is at least 2713 on the S&P. Notice that as this trend line has moved down, the 2700 level is no longer as important as it once was. If you recall last week, I talked about the key level being 2700 because of the round number. Now that still is probably going to give a little bit of resistance to the market just because it is such an important number, but the trend line obviously moves down over time, and now the trend line is here around the 2685 area. So just keep that in mind. These blue lines here are Fibonacci fans. I'm going to take them off. I do want to point out that the recent consolidation happened right at the 61.8 Fib fan, which is an important level, but we did also break above it and then fall below, and basically this level has now been, or this sort of technical nuance, I should say, has now been obliterated. So the Fib fan doesn't really matter. And the gray box here, I'm still leaving it up because it is still that large box area that I talked about. There was huge congestion there where we saw 100% retracements back and forth before we finally doubled the value of the box and went lower. So I do think that area is still important. Okay, let's get a little bit deeper into this, a little bit more nuanced by looking at the market profile. And this will really drive the point home about how important this week is, and also what is the most important level in this market for the next week. If you remember any level in this market, I only want you to remember one, and that one is this one, which is 2665.50 right here. Why do I say that? Because as you can see, I've called it the top of balance. And what does top of balance mean? That simply means that it is the upper end of a balance area. A balance area in the markets is where you have relatively equal highs and or value area that is very, very overlapping, and you can see that clearly here. You can see the market there was value here, it was unchanged value the next day, and then yet an inside value area here. So this is your balance area, and I call this the balance area high, which is the regular trading hours high of those 3 sessions. And interestingly enough, notice that when we had a very monstrous gap of about 25 points on Friday, where was the low of the day? All right, look at how the open is here, always at the green circle, and look at your low, right to the top of balance, dead on it, which is of course the high of that RTH level from a few days ago, that regular trading hours high. So this is very, very important, not only because it was the pullback low early on Friday, but also it would represent a re-entry back into balance. So remember that if we were to go back into balance, that would designate the entire range of Friday as a look above and fail, and the target then is always the opposing end of balance, back down to the other side. So keep that in mind. That would be a very, very important failure, I think, for the market if we were to break out of this 3-day balance and come back in. So it's very, very nuanced, and it's very, very important. I am noting, and this is really kind of just very, very nuanced, but it does matter. The point of control volume-wise didn't migrate higher. And remember, that's only important on certain days. On any given just run-of-the-mill day that's not really trending, you know, let's say like for instance here where you're inside of balance, I don't pay that much attention to whether or not the point of control migrated up or down, right? On a trending day or on a day that is like a day one of a breakout, I do think it's more important because you want to see that point of control migrating in the direction that the market's moving and confirming that move. So given that Friday was day one of a breakout after 3 days of balance, I am noting that the point of control didn't migrate higher, and we didn't really have a trending day either. It wasn't much of a trending day higher. It was just kind of a gap up and hold. Now, some of that may have been attributed to the fact that the market was overly long in the futures market from the prior day's close, right? Because notice that this is Thursday's close, and here's where the overnight futures opened on between Thursday night and Friday morning, and it was a situation that we call overnight inventory 100% net long. Why is that, right? This is the entire overnight session, and we call that 100% net long. Why? Because 100% of the session is above the prior day's settlement. So that tells you that, now that doesn't mean that every single individual in the overnight is long, but it tells you that the futures are 100% net long, right? Because if the prices are rising from the settlement and just kind of going straight up, we can imagine that the majority of the people are long. Obviously, there's a huge long imbalance. When the overnight range is more split, like this, where about half of it is above the settlement, or rather, excuse me, that line's actually here, not there. Half of it is above the settlement, and half of it is below. We say that overnight inventory is very balanced, and it gives you another piece of very, very important information coming into the next session. For instance, when this Friday session occurred, which was nothing but more balance, I wrote about this very, very clearly in my pre-market perspective, and I told my readers, I said, probably we'll get more balance today. The odds are strong that we get more balance, and it turned out to be dead right. The market didn't move much on Thursday, and I knew that because coming into the market, the overnight inventory was very, very balanced. And when the overnight inventory is very balanced on either side of the settlement, there is really no impetus for any shock and awe from the open. Think about it. Nobody is scared. Nobody is disappointed. About half the players overnight got long and about half got short, and then the market opens more or less in the middle of that overnight range, and that range is also within the prior day's range, kind of nested like that. So for the most part, not much happens. And then between Thursday night and Friday morning, boom, it just explodes out of the gate. You get the big thing here. So as I was saying, is part of the reason for the Friday balance could be that it was balancing off this overnight inventory, which did not correct at all. So that is something to keep in mind. So there's always different nuances, and some are pointing to a more bullish outcome, some are pointing to a more bearish outcome. You have to take heed of everything. All of it matters. It's all extremely contextual. All right. I'm going to finish up with just a brief look here at some of the other indices, which are looking pretty good. And then I'm also going to give you a stock pick which, as I said in the introduction, I believe is the most bullish stock out there. This stock has a great story. I'm not going to waste your time with all the fundamentals. You can look it up yourself when we get to it. But it really has an interesting story. I think they're doing some amazing things, and I think you're going to love the chart. But before that, just a quick run through some of these other majors, especially the NDX and the Russell. NDX is sitting right up against the 50% retracement. Now this is interesting because notice that the downtrend line in the NDX actually broke a while ago. We broke it back here last week, and then we spent a little bit of time underneath, and now we've broken back up and we've double topped right at this 50. So this would imply to me that this kind of wants to continue up, although I'm still always wary of the fact that this trend line is very, very steep and there's been very, very little correction. But we do want to point out that for the most part it looks like it's moving higher. And Russell is also just now breaking the downtrend, and here's your trend line anchored here. Now obviously that main trend line is all the way out here, but we do have another one here, right here, and you can't really say that the rut is definitively breaking trend because it's a more shorter term trend. Technically we could draw our trend lines in a little bit tighter. This is a swing out method, which means that you start here and you just swing out to that point. But really, in order to do this right, we should really put it in tighter here. So you can say this was a trend line break that failed, or you can move it out to here. And the rut has obviously broken trend, and it's holding above. And this makes perfect sense because the rut tends to be a leader. So notice that even though it has broken trend, it has not yet taken back the 50% retracement. So that also could be a resistance point. And obviously, if the market wants to really explode to the upside, the Russell is going all the way up to 1560, which is its 61.8. All right. And last but not least, as I said, I was going to leave you with what I feel is the most bullish stock out there in the market right now. And that is a stock called NVCR, November Victor Charlie Romeo. The company is called Novocure. Look at this bullish action. I've actually been long this for some time now, in the low 40s, and then in this move down I just held. I consider this a very, very long-term hold. And here is the prior resistance just above the 5250 area, and I think we're going there, and more than likely we will have a little bit of a pause. And if we do have a pause, any pullback, I believe, is viable. And look what the monthly looks like. This is the chart that really intrigues me, is that the stock hasn't been trading all that long, and yet there's possibility here of a seller's shut-off pattern, which is where one bar takes back multiple bearish bars. So you can see this is like your bearish area, and then there's possibility that by the end of January we could fill this in here, and it just takes back all of that. And if so, then the prognosis for the next monthly bars, which would be February, March, April, and so on, should be very, very bullish. So I wouldn't be surprised if over time we might see a double here. For me, it's a very, very long-term hold. Again, I'm not going to tell you exactly what they do. You can do that research yourself. But I will say it is very, very interesting and very, very exciting. All right, that's all for this week. So remember, very, very key and pivotal week in the stock market this coming week. I believe it's going to decide whether or not we break trend to the upside or return back to the downside and maybe test those recent lows. All right, be safe out there. On behalf of myself and the entire ShadowTrader team here in beautiful Philadelphia, Pennsylvania, I wish you good trading and good night.